Hello, everyone. And I just want to say thank you to everyone who took the time today to register and to attend this year's Refresh to Relaunch. This is the fourth edition. And this year, I thought that it was necessary to talk about how to build holistic wealth, or rather, to build wealth holistically. And sometimes when we talk about wealth, we're always thinking about money, money, money. But wealth is not always about money. It is holistic. It is about your health. It's about your finances. But again, it's about managing life's unplanned circumstances and events. So in case you're wondering who I am, my name is Ibinabo Enebi, and I am the host of the podcast EB Speaks. Do me a favor, go to my YouTube channel, Ibinabo Enebi, and subscribe to my YouTube channel, Ibinabo Enebi. And the reason why I do the podcast is because I feel that collectively, that our stories and our experiences and our expertise would serve as streetlights and survival kits for those coming behind us. And you will learn today. You would receive the tips and the tools to help you to create holistic wealth for 2025. Thank you for joining and have a fantastic time. But first, I want you to make sure that you're not distracted. I want you to get your piece of paper and your pen because you're going to be schooled. IB?
Perfect. Thank you so much, everybody, for joining again. So I'll just officially say that my name is Ibi Wanze, and today I'll be supporting the creator of this incredible platform, Ibinabo Enebi. To host this event, I'll be the one introducing the speakers and asking them all the right questions and just ensuring that the event goes seamlessly tonight. So just as Ibinabo Enebi has said already, I mean, when I think about holistic wealth, it's not just about financial success. It's really about achieving balance across every area of our lives. So financial, physical, emotional, in order for us to be able to live a fulfilled and meaningful life, right? So today we have an incredible lineup of speakers, all of them all well-versed and experts in their own subject matter areas. And we'll be covering various spectrums of the conversation. So from building strong financial foundations all the way to ensuring that physically and emotionally you are well prepared to go forward and build emotional success in 2025 and beyond. And also, one of the things that we've added onto this is to teach us how to actually manage grief for those of us who've been through traumatic experiences, which might be holding us back, to unlock that and help us to catapult ourselves into another realm where we can begin to achieve our full potential. So that's really what to expect today. So just as Ibinabo Enebi said earlier, we're going to get the speakers to speak for about 10 minutes, where they're going to go into depth into their subject matter areas. And after that, we'll have about 5 minutes to ask them questions. So please feel free to put your questions into the chat. Right, we might not be able to get to every single question, but that's what the breakout rooms are for. So you have a chance to go into the breakout room, speak to the person who, like Ivy said, most resonates with you, ask them all the questions, because you're going to have an opportunity to take away some meaningful nuggets that you can action going forward. Okay, so now I've said that, we're just going to quickly introduce our speakers. We will get more of a chance to know them better when it gets to their turn. But for now, just to go on to emphasize just how powerful the panel of speakers we have are today, I'll start off with Kemi Animashon. She's here. So she is going to be touching on securing your investments, right, and also giving us an introduction to the whole, wealth creation spectrum. So she'll lay the right foundations and also explain to us about the risk. She'll talk about some of the segments of creating financial wealth, and from her you will learn key strategies on how to protect your hard-earned money from risk. You'll also know about the structural foundations of what wealth means and all the areas that we'll be covering today. And then we'll go on to Dr. Ayodeji Abel, and he is an expert as well. Bear me 1 second, let me just get onto his profile very quickly. So So yes, he is an expert in the subject matter as well. He's been an expert for about 18 years, business strategy, investment research, economic analysis, and he's the MD of Optimus by AfriInvest. I think I've heard of AfriInvest before. So he's based in Nigeria. So for those of us who are joining from Nigeria, we'll have a chance to get the Nigerian flavor of this. So to get some specific Nigerian related investment strategies. So you can have a chance to join his breakout room and ask pertinent questions if you're from Nigeria. So on his segment, you're going to be able to learn about building a financial legacy for yourself, how to navigate the stock market, and how to take advantage of economic opportunities, and some strategies to ensure that you build long-term financial security for your family. And then on from that, Clara Rufai, she's going to focus more on the insurance element of it. So she's going to talk about how to leverage insurance to build financial stability. She's a licensed financial advisor with the Open Work Partnership, one of the UK's largest financial advice networks. And she's got a wealth of experience in legal and compliance roles. And now she's focused on helping individuals protect their financial future, particularly focused on protection. So from her, you'll be learning about how to use insurance as a tool for wealth creation, the importance of proactive financial planning, and how to select the right protection for your long-term goals. Okay. And just I think I missed something about Kemi Animashaw. I need to go back to her profile just to emphasize that she's also a seasoned financial advisor with experience in mortgages, pension, and investments. Okay, so I'm sorry for that segue. I'm going to go back. So we're going to, like I said, we're going to touch on the three financial aspects of it, and then we're going to go into the health element of it. And for that area, we have Dr. Paul Wakama with us today. He will be focusing on health is wealth and why your well-being helps you to drive success. So he'll be connecting the dots between physical health and financial success. And he's got 30 years of experience in public health. He is a former assistant controller general of, sorry. So he's a former assistant controller. I think he's in Nigerian prisons. He's worked in global organizations such as WHO, NCDC in health strategy and disease prevention. So from him, you will learn how poor health can limit productivity and income potential, practical lifestyle strategies to help improve well-being and longevity, and also the financial benefits of proactive health management. And finally, we'll be wrapping it all up with Golam Fernandez, who will be focused on transforming grief into purpose. So for her, she'll be teaching us how to turn loss into a catalyst for growth. She is a certified grief specialist and a founder of Handling Grief, which provides action-oriented strategies to help people navigate loss and find renewed purpose. So on her session, you will be learning how to transform grief into driving force for personal growth, steps to process unresolved growth and regain hope, and how emotional resilience creates intangible wealth in life. Okay, so without much ado, we're going to go off into the presentation side of the event today. Don't forget, if you have any questions as the speakers speak, please put your questions in the chat box. If we have a chance, we will try to get to all of our questions. If we can't, then you can take it into the breakout rooms and get more explanation on that. Perfect. So Kemi Animashaw, you are the first speaker today. Thank you so much for being here. I know you have slides to share. Maybe you want to do a brief introduction and go straight into your presentation, please.
Fantastic. I'm sharing my slides. Please let me know once you can see my slides and what you can see.
So yes, we can see your slides now. If you want to make it perfect, great.
Perfect. So thank you very much. I've got 15 minutes and I hope I can share all I have to say in that time. However, if you have questions, you know what to do. Use the chat box. So today, the topic is secure your investments, secure your future. And I'm going to introduce myself very, very quickly. I'm an experienced financial advisor. I specialize in protection insurance, mortgages, pensions, investments, wealth management, and financial planning. I'm an executive sales manager for Eminent Financial. We're an appointed representative of Open Work. We're based in Canary Wharf in London, and we're fully regulated by the FCA, the Financial Conduct Authority. Just to let you know, Everything I'll be sharing today is just to give you nuggets. Nothing today will be classified as advice. However, if you need to book a one-to-one session, then we can go through this the session and I can provide advice. Very customer-centric. I'm married. I've got 3 children and I live in London in the UK. So the first question I'm going to ask you, I hope you all have your pens and paper, is, are you financially secure? And some of you may ask me, what is financial security? And if you're one of those that's asked that question, I just have the answers for you. So before that, I'm going to ask you another question. What is your greatest asset? This is a very key question. The topic for today is securing your investment and securing your future. But do you know what your greatest asset is? Because of time, if you said you are your greatest asset, then you are correct. You are your greatest asset. Think of everything that you do. Without you, can that happen? No. You are your greatest asset. You protect the goose that lays the golden egg. And that goose is you. Let's look at the principles for growth. As I said, I had to, make this, compress this into 15 minutes. The principles for growth, I call it CDR. The first one is compounding. The second is diversification. And the third is risk management. Let's talk about compounding. I'm sure as we were growing up, you remember the adage, little drops of water does make a mighty ocean. And I'm sure we also remember when we were in school, we learned about simple interest and compound interest. And I'm sure we all know the difference between the two. But what does compounding really mean? It means that when you invest and those events generate returns, the returns are added to the original investment and is all invested together. That is what we call compounding. It allows your investments to generate additional returns over time as both the original investment and the accumulated gains grow together. Small actions or investments today can result in substantial outcomes over time. Do the maths. Go into Excel after this. Go into a compounding software and just put something there and you'll be shocked at the returns. I always say that if we leave a tap closed overnight, when we wake up in the morning, there'll be no water. However, if you leave it slightly open and put a cup under that tap, I'm sure in the morning when we wake up, there'll be some water in the tap. Please make sure your tap is open. That is investment and compounding. Let's talk about diversification. All of us know we should not put all our eggs in one basket. That is the simple meaning of diversification, where we spread all our investments across various asset classes. And why do we do this? To reduce the risk and enhance long-term growth potential. Your investment portfolio should be diverse to protect against market volatility. Let's talk about risk. Know your tolerance. Are you adventurous? Are you cautious? Or are you just in between, balanced? You need to understand your risk tolerance. Not everyone feels at ease with risks, and not all investment strategies are appropriate for everyone. Of course, we should all know that there is an element of risk in growth. When you speak to a financial advisor, they'll say to you that investments may go up or down. However, when you invest on the long term, in accordance to your risk tolerance, at the end of the day, you should be smiling. Now, let's analyze our financial status. Because for us to be able to secure our investment, for us to be able to secure our future, we need to understand where we are. And I've called this the financial status evaluation. And I also want you to bring out your pens and make a note of which stage you are and also where you'd like to be, because we're going on a journey. I'm going to start with stage 4. Stage 4, I asked the question earlier, are you financially secure? Stage 4 is at the stage where we're financially secure. However, what keeps us there? We need to make sure that that stage is secure. And how can we secure that stage? Protection. Clara is going to come on later to talk to us about protection. However, I will lay the foundation and she'll build on it. Stage 4 is when we are financially secure, where our passive income is enough to take care of our outgoings, where if life happens, we will be fine. That's the stage where we can say, yes, we're secure against uncertainties. We're secure against unexpected events, where everything we've invested would stay there. This is the stage where we can actually say we're building wealth, we're enjoying wealth, and we're preserving wealth to also build what we call generational wealth. However, we need to go on a journey to take us to that stage. Stage 1 is when our investment, no, I beg your pardon, when our income is just enough to take care of our outgoings. Stage 2 is when we can now start saving. Stage 3 is when we can start investing. And stage 4 is when our investment, our passive income, our profit from business, our interest from savings, all the returns we get from our passive income is enough to take care of our outgoings and maintain our lifestyle without needing to lift a finger. And what keeps us there is protection. Nobody wants to be in stage 0. I call stage 0 the red stage. This is the stage where what is coming in is not enough to take care of what is going out. And this usually happens when a life event happens. Life will happen, and we need to make sure that we're prepared in case that happens. So make a note of where you are and where you'd like to be. I'm sure when Clara comes in, she'll take you on another journey to be able to put all of this into figures. The second principle I'd like to touch in my few minutes is the principle of financial intelligence. And what is that principle? Is getting maximum reward for minimal effort. How should we distribute our income? The first 10% should be for charity. The Christians will call this tithes. The Muslims will call this sadaqah. Whatever you call it, 10% the principle says we should give to charity. This is a guide. Then the next 10% is to pay yourself. We all work very hard, and we need to ensure that we have a work-life balance. There is no point accumulating all this wealth and we don't enjoy it while we're healthy. I'm sure some of us have seen one photo where, this couple had just retired and they were going on a boat and they were fast asleep. But let us enjoy now. It's okay to go on a weekend away. It's okay to have that spa break. It's okay to buy that thing you really want to have, because the allowance is there to pay yourself and enjoy the things that you love. Then savings and investment. I spoke about the stages. Once you get to stage 2, you should start saving. We need to have funds for the rainy day. We call this emergency funds. Once our savings are in place, we need to start investing, because it's the investment that will generate the passive income that will take us to stage 4. Some people are spending their passive income and some are spending the capital. Which boat are you? We should all make sure that at the end of every month, we're getting extra income from passive income, which is earning while not being active. And what keeps us there, what helps us achieve that goal, is to make sure that that income is protected. This is called income protection. Clara will touch on it, because in my view, without an income, most people's plans would fail. Then our outgoings. How much should we allocate to our outgoings? The principle says about 65% of our income. If you're spending more than this on your outgoings, either you increase your income or you reduce your outgoings to essential. And if you don't even spend up to 65% of your income, then 40%, for example, if you spend only 40%, then increase your investment, and guess what? You gain even more passive income. The principle also says we should set aside 5% of our income for protection investment. You notice that I didn't call it an expense. I called it an investment. Once we can all do this, if we can all do this in our community will be a better place. We'll secure our investment, we'll secure our future. There'll be no GoFundMe. There'll be no WhatsApp groups. And guess what? We can pass on generational wealth to our family. And I have just one last slide while I wrap up my 15 minutes. And it's called the pyramid of need. Most people come to me, Kemi, I would like to invest. But guess what? I take them back to the foundation. Because think of your house. The reason why you're comfortable to be in your house, because you're sure that you're standing on a solid foundation. And it's the same for your financial house. You protect what you earn. You protect what you own. You protect what you owe. And you protect those you love. We should not die for free. If anything happens to us while we're young, let insurance companies pay us. And that wealth will be passed on to our generations. It costs very, very little. You'll be surprised. That is the foundation of financial planning. Protection is the foundation of financial planning. Protection is the bedrock of financial planning. And I emphasize this, that is how we secure our investment. This is how we secure our future. Once you're protected and you've laid that foundation, then you can build on it and start saving. Once your saving is in place, then you can build on it and start investing, because investing is for the long term. It's those investments that give you that generational wealth. It's those investments that makes you keep going until you reach your financial goal, until you build your financial house, until you roof your financial house. So thank you very much. I hope I've laid that foundation for you. I didn't have too much time, but I hope in the few minutes that I've had, I've been able to lay that foundation where the other speakers can build on. And if you'd like to contact me, I'll drop my a form in the chat box. You can take a picture of this screen while I hand over back to Ibi. And also you can fill the form. I'll get in touch with you and we can arrange a one-to-one meeting where you can delve deeper into your financial need. My joy will be to help you build a financial house. My joy will be to help you secure your investment and also secure your future. Thank you for having me today, and I look forward to connecting with you when the time comes. Thank you very much. Ibi, over to you.
Fantastic. Oh, Ivy, just give me a minute. Okay. So I have Kemi's link, Clara's link, and something from Gulam there in the chat box. And if you are enjoying this conversation and if you think that you have people that should be here but are not here, I have the link to the conversation, to the program in the chat box as well. So you can just quickly copy the link and send to your friends. Ib, I'm sorry for interrupting.
That's perfectly fine. Thank you so much, Kemi, for that really articulate introduction. I think the most important thing I saw there was the pyramid of needs, really, because it actually just creates a pictorial view of where to start from. And I think that's something that everyone can take away today. So just quickly going to questions. So someone asked in the chat room, I think it was Ken who asked, he'd like to know the difference between the 10% payment for self and the 10% payment savings and investments.
Okay, can you still hear me?
Yes, we can hear you.
Fantastic. So the way the principle of financial intelligence has been designed is to make sure that everyone has something allocated. So for yourself, we need to have self-care. We need to have work-life balance. Most people work to pay the bills. When you hear people say, why do you go to work? Why do you do what you do? Oh, I just need to pay my bills. But they forget self-care. People feel guilty to buy a pair of shoes. People feel guilty to go on a spa break. They're thinking of their bills. Well, if you can allocate your income at the end of the month accordingly, you will be balanced. You will have a work-life balance. You have savings, you have investment, you are going to be taken care of, and your protection will be taken care of. Everything is about planning. How many of you bring out a spreadsheet? £2,000, and I'm going to allocate £200 for my tithes, £100 for my protection, £100 or £200 for my self-care, £100 for my savings, £100 for investment so that I can start generating passive income. So it just breaks it down for you. It helps you. One of my advisors said to me that she spoke to her client, and after a couple of months, she came to her and said, for the first time in history, my account was balanced at the end of the month. because I knew what to do. And sometimes just a little education that will help us allocate that fund at the end of the month. So I hope that answered the question and gave a little bit more. Thank you.
Perfect. Thank you very much. So I can't see any other questions here. So I'll ask you one question, which I think might be something that might be on some people's minds here, because I see that we have a diverse range of listeners today. So from very young to maybe people, you know, a little bit more advanced in age. So for somebody who is literally just starting on the journey and thinking, oh my God, I'd like to feel a bit more financially secure and stable, where do they have to start from, especially if they have, you know, they're still spending quite a bit of their income on, you know, solving everyday problems, and they still haven't been able to, you know, think about putting that little aside. Where can they start from?
Well, I think, oh, there's somebody, let me just mute. Yeah. So I think they start from the very beginning. The first thing to do is to book a meeting, because sometimes you might want to do this alone. And by the way, booking a meeting with us is at no cost to you. So don't be worried that, oh, after this meeting, yes, it's at no cost to you. The first thing I would recommend is to book a meeting. I'm here, Rafa is here, Rafa is here, speaking very soon. And you also have the opportunity to meet her in the breakout room. Book a meeting, let a financial advisor guide you. You know, we have gone through the process. We have read all the small prints. And our role is to help you achieve your goal at the end of the day. Our role is to take you on a journey. We look at where you are now, where you'd like to be, and our role is to help you get there. So we'll just share a few nuggets today just to get you started. However, when we meet with you, we can look at your current situation and also map that goal for you and help you stay on track over the years. I hope that answers your question, Ivy.
Perfectly well. Thank you very, very much. Great. Okay, so thank you. I know you will be staying around for the breakout session. So if anybody has more questions for Kemi, please make sure you take advantage of the breakout sessions coming, which we'll do after all the speakers have had a chance to present. And the breakout room is going to be for about half an hour, so quite a lot of time for you to get those questions in there. Okay, perfect.
Thank you very much. Thank you.
You're welcome. Okay, so moving on from there, we're going to have Dr. Abel. He's going to again drill down from where Kemi has left off, going into a bit more about creating financial wealth as well. So thank you very much for that. Okay, so I can see your oh, perfect.
Okay.
Your slides on there. Great.
Yeah, good evening. Good evening, everyone. Thanks for this opportunity, and also good evening to the Get Finance community members. I can see some of you. And Mrs. Kemi has laid a very strong background. So she has, I'm just going to focus on those investments. And I think that because if you don't understand that background, whatever I'm also saying here would not even, it will just be theoretical. And I like the way she's been able to put that. So within the short period, like I just have 10 minutes, and this is just going to be like an appetizer just to let you know these are the options. We may not be able to go deeply into some of these things at this point in time. So what we're talking about, building generational wealth, and like the background that has been laid is different asset classes. So you talk about apart from the insurance, the trust, the asset classes that you're also, should you have all your funds in stocks, in fixed income, in mutual fund, in alternative assets, is going to be based on your risk profile, your investment objective at the end of the day. And that's why it's always bespoke. It's unique to the individual based on your need. And going directly into the investment options. I'll be starting with fixed income, which this is for those that are not willing to take any risk. From the word fixed, it means that whatever you can determine what you get at maturity. If it's 6%, you can calculate it. If it's net of tax, you know, and that is what you'll get. So across, knowing that the people from different countries on the platform. So, but starting with, for those that wish to invest in Naira denominated assets, so you have treasury bills. And I would say this is the time to take advantage of the high yield environment. It doesn't always remain this high. So when you are investing in treasury bills, we say go long, means that take advantage, invest in the longest maturity. And what this would do for you is that when interest rate comes down, because you have locked in for a long period, you will not be affected until maturity. So this is a government issued instrument. I would say it's almost no risk because government can print money. Yes, we can complain about inflation, but they have control over these treasury bills. And across, if you are new to a minimum, we are doing the secondary market, 100,000. You look at the FGN savings bond, which is issued every month. This also going for around 17 and 18%, 2 years, 3 years. Fixed income investment is also issued by the government, and it enables you to lock your funds for 2 years, 3 years. One thing I think I would like to also state that I've seen why investment also works is because it also reduces the temptation of just spending if you have the funds in your savings. So before you would break your investment, it means it has to be very cogent and very necessary for you to do that. So it helps you look away from that funds. Also for commercial papers, this also works like treasury bills, but these are issued by corporates. And you need to invest in those that have good ratings. There will be no time to discuss and go into very more details, but we can take questions as we progress. High yield savings. So we know in Nigeria, for instance, the maximum you can get on your savings account is 30% of MPR, which is MPR is around 27. It's less than 10%. So, but banks also to take advantage, and there are also reputable platforms that are regulated that can offer you high savings. We know this is in Nigeria, the inflation rate at almost 34, 35%. Yeah, negative return, but it helps you to bridge the gap. Then you can also invest in dollar savings. So I will always say, if you are earning in foreign currency, please avoid converting most of your dollars to Naira to invest because you get very exposed. So if you are earning in pounds, try to at least invest either in dollars or invest in pounds. Don't convert to Naira to invest because of Naira devaluation. So you can take advantage. We have there $1 billion in DOM accounts not earning anything in Nigeria. So, and also abroad, you earn 2-3%. So if you are able to earn 7-8, there was this last year, government issued a fixed income fund bond at 10%, 9.75%. You can earn your return because it's also in foreign currency, so you are hedged. And with the current situation, country, we don't foresee a situation where there will be restrictions. You won't have access to your dollars. Then UKT, for those that invest, UKT, UST, this is US, United Kingdom Treasury, as well as the United US Treasury. You would observe because of the currently the interest rate is high. We saw that most banks began to cut down on interest rates last year and may likely continue. Bond and the prices of these instruments are trading at deep discounts. So it's for those that are able to that have that patience. Some are trading the UKT. You see some even at almost 48, 49 pounds that they're trading. Also, the UST are maybe at 60 some. So when you buy at deep discount now, most of this, when it gets to par, that's almost 40%. So those are like opportunities that you can also take, and you also have Euro bonds. So I'll quickly move to stock investing. This means you are already, based on when you look at the risk profiling, so from less, you are risk averse. So this has medium to high risk, depending on where you are playing. For stocks, with the return is not guaranteed. But if you invest intelligently, over time, it's been proven over time, the return would surpass fixed income. But you have to invest intelligently. So either you're in Nigeria, you're doing Nigerian stocks. Even in Nigeria, you can also do US stocks. In the UK, you can also invest in pounds, in stocks. And you see, if you don't want to take much risk at all, you have the equity mutual funds and exchange traded funds. So just yesterday, I was looking at the return of the Vanguard 500, which captures the top 500 companies in the US, exchange traded fund. And the average return is around 20% in the last 5 years. So you see the return that you are getting in dollar terms, or even if it's in pounds, you see on those platforms. So they've also converted them to pounds. So the return you are getting will be higher than just waiting and getting the 2-3% that your bank will be paying you if you're in the UK or in the US. So it's important that we note that. So just because of our time, these are various forms of mutual funds. And now we'll wrap up with still second the last slide, real estate. Based on the expected reclassification in Nigeria, the real estate sector is going to be like the third largest sector because a lot of activities are going on there. If you get it right, if you have the capacity, if you work with the right developer, there are a lot of opportunities based on location. Location is key. And you can work with lawyers when you are going into this. And that's why we say for savvy investors, so you don't lose your capital. Paying 1%, 2% for someone to help you, for a lawyer to help you review the agreement before you invest and also do a bit of background check is really minimal compared to losing your capital. So you need to take advantage of that low-cost housing. They present a lot of opportunity. Talking about cryptocurrency and digital assets. This is high risk for those that are high risk. And I say if you are just starting, you put funds that you think you can part with until before you understand the terrain. So it's what we're trying to learn today is allocation. So even if it's 1%, we saw when BlackRock, even if they put 1% of their AUM, it means it's not going to affect the total AUM, even if it doesn't go as expected. Commodities, gold. You may not buy the gold directly. They are gold ETFs. They are oil ETFs, crude oil ETFs that you buy and you're able to track this commodity and you benefit from their upside. Then private debt, so you see private equity, high risk, high return. You know, that's what's in investment. And as we also wrap up, I think Mrs. Kemi has spoken about insurance, protecting your investment. That is very key, and trust. That you need to protect your investment, protect your loved ones. These people always avoid or leave this done. It's really very key and important. And this is the last slide. The summary of what we are saying today is that when you are building wealth, you also diversify. You would see, spoke about diversification. So you can decide this, and that's why we say investment is bespoke. It has to be customized. We need to understand your investment profile before we know how to allocate. But you can't have all your eggs in one basket. You need to spread it and optimize your return. Thank you.
Thank you very, very much, Dr. Abel. I really enjoy the fact that there was a lot of Nigerian-centric information there, because we have quite a few people from based in Nigeria. And even for those of us in the diaspora, this is useful too, because sometimes we want to know how to tap into the Nigerian market, but we don't even know how to or where to. So to me, it sounds like I'm sure there are quite a few people on the call who are not as financially literate, so don't understand a lot of the concepts here. Fair enough. Like we said, please reach out, book sessions with these speakers if you want to learn more about some of the topics in detail. Today was just an overview to give you some kind of foundation to understand the concept. But my question to you would be, for somebody who is just starting again on this journey, you mentioned platforms. So say I wanted to invest in the Nigerian market, for example, where would I need to go to start from with that?
Okay, for someone in that, the first thing is you ensure we know the regulator is the Securities and Exchange Commission. First of all, the firm has to be regulated. So you can go to the website and check that they are registered and they're active.
So we work with a firm, right? So what about if we wanted to do it alone? Because I trade stocks, for example, and I will go on all of these web platforms and I just register and start off. Are there such platforms in Nigeria at the moment where we can see some of these markets?
Like you mentioned, the Optimus by AfroInvest will also work. You are able to trade US stocks.
Oh, is that a platform?
Yes, you can trade US stock on Optimus by AfroInvest. If you want to trade Nigerian stocks, there's also the AfroInvest store where you can trade Nigerian stocks. So there are platforms like that. And the beauty about it is the fractional share. So you don't have to have have money for 1 unit of Apple shares. So you can buy $5, which is the percentage of Apple shares. And when they pay the dividend, you also get that fraction of that dividend.
So you're saying that people can actually start investing today with 50,000 naira?
With minimum of, with $1, you can start investing on that platforms. Yeah, so
great.
This everyone.
So I think everybody, investing and having a diversified portfolio, it's not something that's out of our reach. I think we used to think that it was for the big boys and for the very rich people, but actually it gives us comfort to know that wherever you are, you can start. So we already had Kemi talk to us about the percentages to assign to each areas of our lives. So your 10% investment, percentage for investment, you can put that into this kind of strategy and start very small. That's great. Thank you so much. That was very, very helpful. Thank you. Okay, so now we're going to move on to our next speaker, who's then going to... Sorry?
Just one more.
Yeah, sure.
If anybody wants to contact Dr. Abel for financial advice and how to go about it, then how would they contact him? Dr. Abel, do you mind just putting your details in the WhatsApp, in the message?
Okay, so I'll just put you can send me the direct message on WhatsApp.
Perfect. Thank you. Sorry, we missed that. Okay, excellent. And you're also going to be here for you do have a breakout session as well. So great. Thank you. Okay, so we're going to move on swiftly because we are starting to run slightly behind. So we have Clara Rufai here today as well. I'd already talked about the fact that she's a licensed financial advisor, and she's going to hone in on one of my favorite subjects for today, which is protection. So how do we protect ourselves and our assets and what we already have? I hope I'm saying the right thing, but I guess you will explain in more detail. Do you have slides to share?
Yes, I do.
Perfect. Thank you.
Can you see my slides?
Yes, excellent. We can now.
Yes.
Hey. Can you even see me? It looks like my head is cut off.
Yeah, we can see you. You look great.
We can see. Okay, we can see you, but we can see your slides, but not you.
On the camera. She's on the camera.
I will just continue. Brevity is not my best point, so
please try.
Make good use of my 15 minutes. First of all, thank you to Kemi and thank you to Dr. Ebo for what you've shared. My work is cut out for me. So one of the things that Dr. Ebo talked about is that investment is very bespoke. You know what else is bespoke? Insurance. With insurance, one size doesn't fit all. And I'm going to hopefully just give you a sneak peek of how you can use the instrumentality, and I think of it as an instrumentality, the instrumentality of insurance to build, grow, nurture and to effectively transfer wealth to generations, you know. So let me just make sure that I have something on my screen that is blocking my screen. I'll just move it away. Perfect. So I'm not going to waste too much time introducing myself because I think Ivy already did a great job. One thing that I will say, though, in starting my part is that I have had a long career in financial services. So a short time ago, I used to be a commercial and corporate lawyer working in-house, and I was also a compliance manager. And my compliance background, my legal experience, and all of that has given me a strong foundation when it comes to understanding complex contracts and advising clients, you know, on their obligations and things like that, obligations, rights, and so on. So now, as a licensed financial advisor, I specialize in, you know, protection, which is insurance, basically. I'm so blessed to be able to use my expertise to help, you know, my clients gain that peace of mind that comes from knowing that they have secured their future, knowing that they've made smart financial planning decisions. They have looked at risk management, because all, you know, every aspect of our lives is driven by risk, if you like. And you have to be ahead of the game, basically, to protect yourself from that risk. How can they maximize all the information, you know, that's available in the financial world? And sometimes it is a lot in order to be able to make financial decisions that will protect them and their families. So that being said, I'm just going to open by asking this question. If I ask you, and please do feel free, let's interact, right? Let me know that you're feeling me on this. If I ask you, what is your view about insurance? What is one word, perhaps, when you think about insurance, what comes to mind? It'd be interesting. It has always been interesting to me how different people answer this question. So please feel free to just type something into the box and let me know what comes to mind when you hear the word insurance. And I'm going to be talking about financial security, because to me, insurance, being properly insured, is, if you like, synonymous with financial security. And I'll show you how as I progress. We all want to live a life of significance, right? And there are some aspects of life, whether we like it or not, that are a given. There are some things, one of the things that is a given is that no one knows tomorrow, as we say. No one knows when life will throw lemons at you. So we just have to have that mindset of being able to make lemonade from those lemons. And insurance is one of the ways that we can do that. So right now, let's just say that most of us here are in our earning days, right? But there will come a rainy day. Rainy days are also another thing that is common to all human life. Rainy days do come just as lemons, you know, can get thrown at you. But what do we do? How do we embrace the instrumentality of insurance to ensure that when that rainy day comes, we're still standing strong? We are not mowed under. We're not basically just decimated by the things that happen, you know, the unforeseen circumstances of life. Let me give you some statistics to just provoke your mind this evening, because this is really important. Protection is a need, but one of the reasons why I say, or one of the things that I will use to show you just how much of a need it is, are these figures you see here, very grim figures. 1 in 2, that's 50% for those who know math. 1 in 2 people born after 1960 will be diagnosed with a critical illness in their lifetime. So 1 in 2, that's 50%, right? And 1 in 4 will experience a mental health issue every year. Again, the statistics are not, I don't want to belabor this point, but my point is we need to be thinking strategically and acting strategically. One of the things we should be thinking about, or some of the things we should be thinking about, is as you're sitting there listening to me, assuming, for instance, that you have a partner, you're married, or you have a family, if one of you died, how would the survivor pay the mortgage bills, the rent bills, or any other bills, basically? How would you keep your lifestyle going? How would you be able to support your family? How would you be able to keep your home? A lot of us are, our homes are not fully paid off. What that means is that we owe a loan to the bank, which is called a mortgage. And unless you are, regularly keeping up with your side of the bargain, which is to make sure that your mortgage bills are paid, your home could be basically taken away from you, even after you have paid for several years. So if you were diagnosed with a critical illness, how would your family cope? If one of your children, for instance, some of us who are parents, all of us actually, our children mean the world to us. The things we wouldn't even allow ourselves in terms of, luxuries or, we would gladly do for our family, our children. And we want to give our children the best. If one of them was diagnosed, how would you cope? These are questions that we need to be thinking about. And if you're here and you're not yet married, it's also a perfect time to be thinking about the future, right? Maybe maybe you're a young adult, maybe you're a Gen Z, you've started work recently, you are not thinking about marriage right now, but you have something that is very, very, very precious, and that's your life, and that is your income, and that is so many other things like that. And so all of those things you need to be thinking about. How do I use the instrumentality of insurance to protect myself against life's unforeseen circumstances? Talking about unforeseen circumstances, there are 3 unfortunate events that can stop anybody from reaching our goals. I'm talking about our goals of financial security, right? We call it SAD because indeed they are sad events, and it's just an acronym for SAD, sickness, accident, and death. And that is why, based on the back of that, we always tell people that, listen, needing insurance is so critical that it's not the kind of thing that you can postpone. There are people who have said, oh, I know this is a brilliant idea. I actually do believe in the gospel of insurance, and I do want to sit down, and talk with you about my insurance, but I'm going away on holiday. So maybe when I come back, or maybe in the summer, or maybe at the end of the month, one thing or the other, and then life happens. The truth of the matter is nobody quite knows what's around the corner, which is why you want to get insurance in place sooner rather than later, right? Especially as you start building your wealth, building a family, and, all of those things. So needing insurance is like needing a parachute. You must have it when you need it. Going out when the weatherman has said it's likely to rain without your umbrella means you're going to come home soaking wet. So make sure that you have the parachute that you need even before you need it. In fact, it's better to have it and not need it than to need it and not have it. Again, more statistics here. Estimated 2.3 million people, focusing on the UK now, people live with coronary heart disease. Grim statistics. And that every 2 minutes, this is publicly available information, by the way, every 2 minutes, someone in the UK is diagnosed with cancer. So imagine how long we've been on this call now so far. I think 1 hour. Do the math. How many people have been given the sad news that it's the C? It's the big old C, the scary C, and they're giving them information about how to cope thereafter. And then children who are under the age of 15, admitted to A&E due to an injury or a sickness. These are all the things insurance can help make better, right? These things will always happen to one of us or to all of us, but how can insurance make it better? This is why you need to be thinking, deeply about it. So I'll move on from the statistics. I do want to tell you a story because this guy, I think, is a good example or a poster child for somebody who took the right steps and how it paid him off. How it paid off for him. I'll be very brief with this. He was a gentleman of 38 years old, medical doctor, earning well, as you can see. So we've used these figures to depict the steps he took and how it worked for him. So when he came to us discussing insurance, we said to him, well, how much would you need to be financially secure? And he said, well, he gave us these figures you see on the screen. And he said, if I have £3,000, I spend about £3,000 on my outgoings with my family. And if I had a buffer of 500 per month, that's nice. That's okay. That will do me just good. And for me, that is passive income. And we said, great. And those were the figures that we worked with when we put his insurance in place. And it's a good thing that this young man, at an age, he was in his prime. No one is thinking, I'm going to have a stroke. I'm going to have an accident. And no one's thinking that. Actually, if you talk to people around that are younger, they probably will tell you, yeah, maybe later, not now. But good thing is that he thought differently. He applied that principle of financial intelligence that, Kemi was talking about, and he took out insurance, and that paid off for him, because 7 years later, life did happen. What happened to him? The gentleman suffered a stroke. As I speak to you, he currently no longer is able to work as a medical doctor, But because of the insurance covers that he took out, he was able to go from, again, you remember the steps to financial security that Dr. Kemi shared, and how that she said, you know, step 0 is where you don't want to be. Step 4 is the promised land where everyone wants to be. And look at this man. When he suffered that incident, unfortunate incident, of course, it could have brought him all the way to 0. But guess what? Instead, it took him all the way to 4. There aren't many investments, there aren't many tricks or tips or strategies that can do that for you, but insurance. So look at all the payout that he got for perhaps a premium, total premium payment of maybe just under £200. And he's able to get all of this when he needed it, when he wasn't at his most vulnerable state in life. Critical illness cover paid out huge sums. His life cover, everything. He's received all this for the £200 premium per month. So far, as you can see on my screen, his benefit, total benefit is just under 1.5 million. And he has a waiver of premium, which means now that he suffered that incident, the insurance company takes over the payment of the premium. So he's no longer paying premiums, but smiling to the bank for his benefits. And he still has 500,000 in life cover. So if he should unfortunately pass away, his family will be okay. So this is a young man that life has happened to. Instead of sitting down and just being miserable and saying, how am I going to, that would have killed him faster than anything, even faster than the stroke, just there thinking, I have failed my family. My children can't, my family can't live the kind of life that they're used to. That would have finished him off. But he took the right steps, and thank God that he did. So these days he's taking life easy. Himself and his family are building memories. His wife was able to take time off work because she said, hey, what if my husband had died when this happened? So now I'm going to prioritize my husband and my children. They go on holidays and they have all this money to support them. So who should be protected? Exactly what Dr. Paul did, you and all your loved ones. By protecting himself, he also, in effect, protected his family. He also, in effect, paid things forward because he was able to forward dates. I don't know, I'm not sure how to put this now. He was able to make sure that his family's future is secure. Whether he's here or not, his family would be okay. So that is what insurance can do for you. Now, when we talk about protection, again, Kemi mentioned it's an investment. It is not an expense. So please bear that in mind. This is key. It's an investment, it's not an expense. An investment will pay you back. And it's not also the lottery that it's, your chances of winning are 1 in however many million. This, what you pay for, you will get when the incident happens. So there's that, the guarantee that you will get paid out. But risk management, I just put this picture because I love the imagery it creates. So this is us, we're all floating around in life and just going about our life, our duties, or our business and all of that. Nobody quite knows which one of these people is going to get struck by an illness or be in a car accident or is going to die from a stroke or something. Nobody. It could be the guy in yellow in the corner. It could be the one in black. Nobody knows. The whole idea is that as human beings, we come together, we embrace insurance, we put a little bit into that pot so that whoever needs it, whoever of these people need it at any point in time, the insurance company is able to rush the resource, the funds to help support that person. So you have to also be very critical when it comes to choosing the right plan. And this is why you would usually sit with a financial advisor to walk you through. There are different types of insurance. Talk to somebody about insurance. Most people will tell you, oh, I'm okay, I have insurance, I have life cover. Usually, yes, they're always talking about life cover, but there's more to that. Of course, apart from life cover, which I'm sure everyone here knows what it means, funeral cover, which means that your family already knows, you already know that when that time comes, your family will be able to take care of your funeral without, feeling the weight, the financial weight of doing so. And then, so we call those the while alive, afterlife covers. You won't be here when this gets activated, but there are some others that are called the while alive covers. Income protection is just like that pyramid where Kemi said that insurance is the bedrock. I think that income protection is the bedrock of all insurance. Why do I say so? Without an income, most of us, our plans will fail. whatever else you're investing in, including shares, treasury bills, whatever, you won't be able to keep up with that. You won't be able to keep up with anything you're doing, even if it's tithing, even if it is feeding your family, whatever it is, that your income currently pays for, including holidays or a lifestyle. None of that will work if your income failed and you're unable to bring in that income. So best to make sure you definitely protect that. Critical illness, of course, it pays out a tax-free lump sum if you are diagnosed with a critical illness. Accident cover, hopefully that's self-explanatory, and so on and so forth. Because this is a mixed multitude and not everybody needs these things per se, I will just move on from that. The cost of delay, I just want to quickly say that the sooner, the better. Insurance is bought with two things, age and your state of wellness. If you are younger and you take out insurance, you could be paying pennies as opposed to taking it out when you're older, and when perhaps they would have told you, oh, you're pre-diabetic, or your cholesterol, or high blood pressure, little things like that we all just get on with it, live with it. It could mean that you are not able to be insured. You're not able to be accepted by an insurance company. So sooner rather than later. And you might ask me, why the urgency? Why today? Why now? Well, as I said, timing is everything. The best time to take out insurance was yesterday, and the next best time is now, today. Again, as I said, it's bought with two things. Some people don't even know if they are insurable, and they're busy wasting time and saying, oh, tomorrow, oh, next year, oh, in 2027. You don't know. Better to find out sooner rather than later. Again, better to have it and not need it than to need it and not have it. And that's all part of being financially intelligent that Kemi had spoken about. So knowledge is power. Each one of us, I just believe in this. I'm passionate about this because I believe each one should tell one, each one tell one. Our community, our demographic as Black people, most of us, we're not paying attention to this. We're not paying attention to this as much as we should. And it's important that if you understand the gospel according to insurance already, you should be telling somebody, tell a friend, tell a family member. Do you know why? Because if you don't, and life happens to that family member, you're going to be called to contribute to their GoFundMe. So please make sure that you ask every single one to do the right thing by themselves and by their families by taking out insurance. And again, insurance is always tailored, right? One size doesn't fit all. So we tailor it to you, to your circumstances, to your income, your outgoings and everything. So it's very, very, very key to sit with somebody who understands this, who can take you through it, especially if, like for myself and Kemi, our consultation services are free. It's complimentary. So why not? You don't know what you don't know, and when you know better, you can do better. So please, let's meet up in the breakout rooms later, and then we can, go into this a little bit deeper. But for now, I'm going to hand over back to Ibi, and thank you for the opportunity, and thank you for listening.
Fantastic.
I was speaking, sorry, I was on mute. That was so action-packed, and I think it took all of us on a journey about the how, well, maybe not so much about the how, but the what could happen if you didn't, and that example as well about how that doctor was also protected because he had put these things in place. And you can imagine he then had a chance to focus on his health journey. That was incredible. Thank you so much for using that powerful example. I think it's it makes sense to say that it's going to be difficult for us to dissect insurance in all today. So that's why the breakups and breakout rooms are so important, and also they are booking this one-on-one session with you as well to be able to talk through our individual circumstances so that we can figure out what the right insurance is for us. Now, just Clara, a quick question, right? For people who are older, I've heard that the premiums are higher. Is that true?
That is true. And that's what I was trying to say when I said that insurance is bought with your age and your state of wellness. Usually in this country, you get invited to come and do sort of like a life MOT, usually every year, a health check. So you might go in for a routine health check, and you might not even feel unwell or anything. And you go in for this check and they discover something. And the moment that happens, you have to disclose it. Because the reason some people say insurance companies don't pay, well, they will pay if you disclose what you're supposed to disclose. And then if you disclose it, then they're going to have to either rate it, which means you could pay a higher premium, or they could say, no, we don't want it. We don't want this business. We're not able to offer you insurance. Or they could say, do you know what? They could do an exclusion where they say, we will pay for anything else that happens to you or that is wrong with you, except for anything that has to do with your wrist, because you've had carpal tunnel syndrome, for instance, or anything that has to do with mental health, because you've taken 6 months off, 2 years ago when you were suffering from mental health. So we know that is definitely an issue for you. When you don't have any of these medical problems and you come as just clean, so to speak, then your premiums will be lower and you're guaranteed to be accepted. And yeah, once you lock it in, we usually use what we call guaranteed premiums. So what you pay is what you will pay until for the full term of the insurance, and what the benefit amount is locked in as well. So usually people like the comfort of knowing that they don't want anyone telling them stories when they are vulnerable. So yes, the insurance premiums could be higher if you're older, but please, 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 sit down and talk to somebody who will walk you through the intricacies and the details.
Perfect. And I wish that Dr. Abel was able to talk about insurance from the Nigerian context as well. I know that was not part of his remit, but it would have been nice to hear about insurance in the Nigerian market, because I don't know why I have this crazy perception that insurance in Nigeria does not work. But hopefully anyone who has those questions can also meet Dr. Abel in the breakout rooms and then talk about those as well. Lastly, just before you go, one question, United Health. That's another thing that scares me about insurance. United Health, what was trending on social media last month, I think, where that insurance CEO was sadly sadly murdered because people were very unhappy with some of the aggressive tactics that they had of defend and deny, and I don't know. Maybe I'll talk about that with you in the breakout room, but I think,
I can quickly address that. And,
yes, please, if you can.
Who you partner with in everything matters, right? The choice of a life partner matters, and who you partner with in anything you do, especially in something like insurance, matters. Our reputation is something that we're fiercely proud about, at Eminent Financial, the company that I represent, and the insurance companies whose products we're able to offer to our clients we put them through the hoop. As in, look, when I say literally, you don't just come on board that faculty. It's some of the biggest and the best and the most renowned names that we offer their products to our clients. But our allegiance is never to those companies. Our allegiance is always to the client. So we're always looking for what is the cheapest, most comprehensive cover. So how can we keep more money in your pocket, but give you the most robust cover possible? So, with that, it's a checks and balances system. But we follow that process of, first of all, making sure that we understand what your goals are for insurance. Then what are the gaps? What are the gaps that you need to fill with insurance? And then we look for the best products. And then, as I said, it's our reputation and the reputation of the umbrella body that we belong to. The network is called the Open Work Partnership, has some 846 insurance firms under it. And anybody here who is in the UK will be proud to know that Eminent Financial ranks number 4 out of 846. And it's something that, we like to brag about. So if you're working with the right people, then you should be okay. We don't do dirty, and we are very, very, very proud of our reputation in the market.
That's amazing. So it's not just about it's not about having an insurance policy, it's about who you have the insurance policy with.
Absolutely. Who you talk to take you through that journey.
Wow. Okay, wonderful. Thank you so much for that. Looking forward to hearing more about this as well in the breakout rooms. Perfect. Okay, so now that we have spoken a lot about the financial aspect of things, we're going to go into the health bit of things. So, I think it's a perfect segue now, because you already mentioned, Clara, the health aspect of it and why it links so much with insurance as well. So, sorry, Ibi, did you have something to say before we jumped into that?
Yes, I just wanted to say thank you very much, Clara, and I'm sorry for interrupting, but I just wanted to say that anyone who wants to contact Clara, for the free complimentary session. There's a form in the chat box. And so just feel free to fill the forms. Yeah. Okay.
Perfect. Thank you.
Thank you.
Okay, so just going back to my point, again, now we're going to segue into the health perspective a bit. So obviously we've talked about all of these things, but to be able to enjoy the financial wealth, right, you have to have your physical health in check. And that's what Dr. Wakama is going to be speaking to us about. So Dr. Wakama, you have the floor now, please. Do you have, I don't think you have a presentation to share, but
no, I don't.
Okay, that's fine.
Yeah.
Please carry on.
Good evening, everyone. Clara,
So,
that was a very compelling presentation.
thank you, sir.
Unfortunately, my name is Paul, and I happen to be a medical doctor. So the coincidence,
Was scary, right?
if I was not a doctor, really, I would have run out of this program because even though the story had quite, well, a happy ending, but the similarities between our names and our profession, between I and your client, I find a little bit unsettling. But thank you for a wonderful presentation. My name is Dr. Wakama, and I'm here to talk about health and wealth. And we know that it's quite a short program. I mean, we have very little time to say this thing. So I'm going to limit myself. There will be so much that I might left, I might leave unsaid. But quickly, we're going to present like this. We will define health. I'm going to give a definition of health, and then I will give a definition of wealth. I will also briefly describe the components of health. Then after that, I will identify determinants of health. There are social determinants and physical determinants. And then I will try to link health and wealth. And following that, we'll talk about how health affects wealth. And then we will also discuss the effects of poor health on wealth creation. And then to cap it, we'll probably discuss the pathways to good health. And then we'll conclude. So very quickly, I would like to say that health is a total state of physical, mental, social, and spiritual well-being. That is the way it's described and defined in most publications. It is therefore more than the presence, or more than just the present absence of disease or infirmity. And even the World Health Organization recognizes the fact that the enjoyment of the highest attainable standard of health is one of the fundamental rights of every human being, without distinction of race, religion, political belief, economic or social standing. So health is an all-encompassing situation. And it doesn't have any prejudice to who, what, and where you are. So that is health. And then briefly again, I'll try to describe wealth. There are several descriptions of wealth. I mean, the financial experts have described it so well. I'm sure there are so many more. But for the purposes of this discussion, I will just say that wealth is the total value of all assets owned by a person, community, institution, company, or a country. It is measured by taking the market value of all physical and tangible assets owned and then subtracting the debt or liability. So wealth can be seen in absolute or relative terms. So that is wealth. Now, coming back to health, I've already said that it's a state of physical, mental, social, and spiritual welfare. So we'll break it down to the various components of that. Describe briefly the various components of health. When somebody is in good physical health, it means that the person has a good quality of life. You are expected to have strong bones and muscles, good quality of skin, teeth, hair, nails. You're also expected to have a strong immunity. You should have weight control, and then your physical fitness has to be quite good. That is when you say somebody's health is in a good place physically. Of course, the mental health being means that you are able to reduce anxiety and depression. And then you can reduce or control stress in your life. And then you also have the ability of cognitive functioning. You can reason, you can make decisions, as somebody who's in a good place mentally. Now, socially, somebody who is in a good place socially should be able to integrate properly with friends, with peers, with colleagues and family. Build new friendships, strengthen relationships, increase family time if you're a family person. Somebody who is in a good place socially must still be able to meet new people and build good social skills. And then for somebody enjoying good emotional health, the person has self-confidence. There's a good feeling of self-worth. You can be happy. You're capable of being happy. Generates feelings of being happy. And then you also feel that you are successful. You go through life with a level of optimism. You feel that you can be successful. And then you have a positive mood, a positive mindset, and you're able to deal with tension. That means you're emotionally good. Of course, somebody who is spiritually sound is able to find the purpose in life, a purpose and meaning to life. You feel connected to God, the Supreme Being. You're able to set goals. You feel empathy for the next person. So basically, those are the components of good health, where I've described them. Now, what are the determinants of health? On a very broad level, we'll say that there are basically two. We have social determinants, and then we also have physical determinants. Social determinants, of course, are the determinants of factors within the environment that promotes good health. And then those factors include income, somebody who is able to have an income. It means that the person is employed and has some job security. The absence of that, can lead you to adverse health situations. So, working life conditions. You can be employed, but your work environment is stressful. It's not conducive. Some work environments generate stress. Some work environments are actually not good for the person. We can also talk about food insecurity. Of course, food is good for health. And then other social amenities like good housing, sanitation, and other amenities in the house. I mean, when you talk about good housing, the house should be properly lit up, to have good ventilation, to have the right amount of heat and cold. For those of you who live abroad, during the different periods of weather, you should be able to cope. Houses in winter times, you have heaters. In summer times, you have, of course, good ventilation. That is for those of you abroad. Of course, for us here, our homes should have proper adequate ventilation. As for the physical determinants, wow. We talk about genetic composition. I mean, this is a topic that a lot of people run away from. But what an individual becomes is as a direct result of the composition of who the parents are. You know, so for example, the one example that comes to my mind, I mean, people with sickle cell disease, sickle cell trait. We know that somebody with AS has a child with another person with AS, there is a 1 in 4 chance that it would give back to an SS child. And we know what happens to people with SS. It's quite difficult. Even though with good health care, quite a few of them are surviving well into adulthood. But I mean, genetic composition of the individual is the key. And then there are also environmental factors. You know, like I said, clean environment, healthy environment, you know, good drainage, no standing water, especially for those of us that live in Africa, you know, and then hygiene, you know, homes that have good drainage, don't have standing water. I mean, these things are a bit strange to those of you that live abroad, but for us that live in Africa and Nigeria, you know, they are quite important. And then we have lifestyle choices of individuals, lack of exercise, lack of a good diet, people's inability to control their weight, and of course, those who abuse substance, alcohol, cigarette smoking, and even those, some people abuse prescription drugs. We find out that prescription drugs themselves, if taken in unwanted quantities, can be detrimental to one's health. So prescription drugs and illicit drugs, hard drugs, those are lifestyle choices that will affect health. And then absence of good healthcare system. That is a problem, especially in developing parts of the world. And another important condition or factor in health is law and order and security. Every society must have law. Every society must have order. If a society is not secure, its people cannot thrive. Those are the determinants of health. Now, health and wealth. I want to connect health and wealth. You know, health and economic development go hand, whether the focus is on individuals, communities, or countries. It is clear, it is an incontrovertible fact that those with highest incomes tend to have the highest levels of health and life expectancy. At the other end of the spectrum, the poorest countries and the poorest people have the lowest levels of health. So how does health affect wealth or economic development? First of all, we must acknowledge that good health costs money. Those who spend more on their health enjoy better health. Spending on health, you know, is not just about buying medicine and being able to receive good medical attention, but it also includes expenditure on building, maintaining a good environment, safe, healthy environment, and safety in the environment. Historically, studies have shown that people with wealth are able to feed properly, improve their nutritional status, and they are also likely to train their children to survive into adulthood. But again, one must also say that sometimes wealth can affect health adversely, because when people have so much, they have a tendency to overindulge, they have a tendency to eat over-rich foods, they have a tendency, they have access to alcohol, they can gain weight, they may not be able to exercise. You go from your car to your office, back to your car, and to home. And people spend a lot of time in the offices, they live sedentary life. So you must find a balance. Of course, when we talk about the dangers of bad health, there are many. I mean, bad health results in illness, be it physical, emotional, or mental. And when an individual is ill, person's productivity is reduced, efficiency at work is down, you will absent yourself from work, there will be a loss of man hours, and then organizations are deprived of specific skill sets, and there's loss of revenue, both to the individual and to the institution or the working. And then prolonged and or protracted illnesses can lead to job losses, and then depletion of the family income. There's a decline in the living standards of the family. Children are no longer trained properly, and there could be despondency, tension, emotional trauma, and all these things can worsen physical health and even escalate mental health challenges. Okay, so what do you do? What does an individual do, to make sure they remain in good health? Well, regular health checks.
Yeah.
For women who get pregnant, they should make sure they get antenatal care. When they give birth to babies, immunize, they do exercises regularly, do both routine tests and specialized tests for women, breast examination, pap smear, for men, examine for prostate, and all of that. It's unfortunate that the time is quite short. I mean, there are a lot of things to talk about when you discuss health, but I guess I will just wait for the chat room and then answer people's questions as they relate to.
Perfect.
Perfect. Thank you very much. IB?
Perfect. Thank you very much. Okay, so yeah, we'll keep most of the questions for the breakout rooms, but I just wanted to add to something that Dr. Paul has said, which is I think I attended an event recently, and one of the shocking statistics that I found, especially around the UK, was that even though people are living longer, where they're probably living up to about 84 years old, they are beginning to see a decline in their health from about the early 60s. So they go through about 24 years of their lives in gradual declining health. So I think that this is one of the reasons why it's so important to have brought this perspective in, which is to say that we really have to make sure that not only are we healthy, but we are sustaining our health to ensure that we can actually live long and enjoy our health in a good, healthy condition. So thank you very much for that. Okay, and I think just to tie this in nicely, or maybe let's say go away slightly. We have Gulam Fernandez here joining us, and we thought that one of the things that hold people back from springing off to go out there and enjoy their lives properly is where they are stuck in a state where after they've experienced some kind of grief, and grief comes in various forms, right? So people who are experiencing divorce, loss of really close family or a child, or a sibling. There are people who've suffered grief from losing a job and being made redundant. And generally in the current landscape we find ourselves in the world, there's just so much that can make someone stay stuck in grief. And it's so important that we help people here unlock that so that they can go on to really achieve much in 2025. So Golam, without much ado, can you please go into your presentation? I can see that you've put a quiz there to help people. I think it's to assess where they are, the grief spectrum, I suppose. So please go into the chat and do the quiz whilst we're here. Hopefully we'll be able to get something out of it.
Wow, what an evening. What a lot of knowledge about all the things we need to invest in. And thank you so much, Dr. Paul, that you talked about the importance of investing in our health and well-being, because you could have all the money in the world, but if you haven't got your health, what's it going to be for? And it's been wonderful to know about how we can bring in protection and invest in building wealth. And what I want to talk about really is investing in your mental well-being. Imagine if you're starting on a long journey and you have a backpack and it's full of rocks. You'll be weighed down and you might get through life, but the more rocks you've got in your backpack, the harder it's going to be really to move forward. So I'm a grief specialist. My name is Gulam, and I had a lot of losses when I was growing up, and I really struggled. And I realized as I came through it that actually we're not taught how to handle loss. We don't understand what it is. We don't understand how we get stuck. We don't understand how it can rob us of our peace, our productivity, our passion for life and purpose. And so I've now made it my mission to actually help people to understand and navigate losses of various kinds. So the first question is really, why does it matter for us to understand what is grief and why does it matter? Well, imagine someone who's had a lot of bereavements, and it's not just about bereavements. You can get losses of many types, even as Ibi said, divorce and financial losses and health, well-being, romantic breakups, loss of pets. There's so many. In fact, did you know there are over 40 life events that can impact your heart and leave you with feelings of loss and grief? So it's not just about bereavement. There is a common myth that somehow, if you give it time, if you keep yourself busy, if you carry on being strong, that somehow unresolved grief will go away. But I discovered the hard way that no, it will sit there for years until you actually pay attention and resolve it. And each time something different happens, what happens is it gets put into your backpack and it gets heavier. And if you're not careful, you get to a point where it doesn't take much to tip you over the edge. And that's when people get burnt out. That's when they're unable to work, unable to make decisions, and end up feeling very mentally overwhelmed. Well, my desire is to help people prevent that by understanding that it is actually possible to resolve unresolved losses. And what you need in order to do that is to have the right knowledge, the right tools, and the right processes. And by understanding what causes unresolved grief and some of the common myths that we can fall into, and some of the self-sabotaging behaviors we can turn to as a way of trying to deal with the pain, it can make a huge difference. So as we are running late, I'm not going to spend too much time into going things now, but for those of you who it is relevant, in the breakout room, I'll be very happy to talk to you about what some of the solutions are. Let me just give you a few examples of clients I've worked with where they actually managed to resolve their grief. One client I remember was his 3-year-old died under very tragic circumstances. Sadly, he fell out of a high window and died. And obviously that left him with feelings of regret and guilt and wishing that they'd done some things differently. And it just had a huge impact. But after I helped him to work through what had happened and resolve some of the feelings of guilt and regret that he had, he decided that instead of spending his life feeling upset about having lost his son, he was going to turn that pain into something positive. One of the dreams he always had for his son was that he would be able to teach him how to play football. And obviously that was no longer possible. So he decided that he was going to volunteer for his local club and teach other young boys how to play football. And so he actually found a way to turn something that was bad into something that could come out of it. And what I realized is that the thing that makes a big difference really is when you understand that you can't change what has happened, but you can choose your response. You can choose what to focus on. Sometimes we get stuck on focusing on the past, wishing we'd done things differently, wishing we communicated more, wishing we hadn't said something. Or we focus on the future, and the future can be full of fear and full of uncertainty. And that robs us of being in the present, which is where we have our power. So there is a lot of knowledge out there. On my website, you can find many articles and blogs helping you to understand more of those things. And for those of you who are particularly, wanting to know how to navigate losses that maybe you're feeling you're struggling with, do come to the room. Do make use of the things I posted in the chat. There are some free guides you can access. If you think, I wonder if I'm struggling with, I wonder how well I'm managing and handling my grief, you're very welcome to take the quiz. And if you think you might need professional help, but you're not sure, I do offer a free 15-minute call, which you can WhatsApp me for an appointment. If you have any burning questions, please feel free to ask me in the chat. Otherwise, we'll go into more detail in the breakout room because I'm conscious we are running late.
Perfect. Thank you so very much for that and for keeping it brief as well. But again, like you rightly said, the breakout rooms are there. So if you have any questions that you need to or some support needed, please take advantage of that and join us in the breakout rooms. Okay, so in the interest of time, we are going to open up the breakout rooms now. Unless IB wants to say something.
No. Thank you.
Perfect.
Thank you very
Okay.
much. So we're just going to go straight to the breakout room.
Perfect. All right then. Okay, everyone. We're going to broadcast it now. There's 4 breakout rooms. Okay, so for each of the subjects, and feel free to jump in and out of whichever ones you want. So if you're done in one, you can go into another one as well. Can you all see the breakout rooms, please?
Yes.
Okay, wonderful. Perfect. Okay, so like I said, feel free to come in and out of breakout rooms as is needed, so that you can have a chance to speak to all 5 professionals. I know that the first breakout room, one of them, there's going to be 2 speakers in there. So if you can start going into the breakout rooms right now, please.
Yeah, thank you.
Yeah.
Yeah, so you have
I can help you. You haven't bought anything, right? Because you shouldn't be going online to buy insurance. You should actually have someone dedicated to you who will sit with you, a personal service like Kemi and I offer. That's what you need, right? And our consultation service is free. No matter how many hours I sit with you or how many times we have to, sometimes it's between, we may meet to do the intro, and then we create your profile, and then we look for the quotes, and then we apply for the covers and all of that. Sometimes it can take 2 meetings, or 2 1-hour meetings, or 3 1-hour meetings. I do not charge you. It's not, oh, first 30 minutes are free, or first meeting is free, others are charged. You do not get charged, right? So there is no reason why everyone should not be taking advantage of this. And that's why this year, because I'm really passionate about more of our people to be protected. And I hate when we go begging on GoFundMe and make the story really, really pitiful. She left behind 2 teenage daughters. They are lost without their mother. Every little counts. Please, no matter, nothing is too small. I mean, we as people are the people will always give, right? But to go out there and ask for money because your well-being depends on it, or because the person you want to bury cannot even be buried properly without that fund, and then you're asking people who did not know you from Adam, a friend sends to a friend, and a friend sends to a friend, please, this person is we went to secondary school together, please, I know you don't know her, but give whatever you can.
370472. Here we go. Hi, V.
Hey, Gulam, how are we doing? How's everybody
Yeah,
doing?
we're doing good. I suspect that we need to close, but
Yeah, so we just have do you have any other person who's asking questions?
Is there anybody else on here that hasn't had a chance to ask a question and wants to? Now's speak now or forever hold your peace. Mention.
Okay, so I'll just we should be all getting ready to finish at,
okay.
I'll just say in 5 minutes. So
Okay,
17
great.
past 8, yeah?
Okay, great. Thank you.
I've exceeded my time.
That's what we want to avoid. So,
Sister Clara, we should be out in another 5 minutes.
Okay.
You can see it's a very interesting session. I've added.
IB says 2. So here's what I'll do. I'll repeat and we'll write it when we go to the other room. I'll repeat my number again. So if there's anyone
5 minutes,
who haven't had a chance to speak to me, please take advantage of my free.
Topic was health is wealth.
Oh,
so we discussed, yes.
We have 3 minutes to round up.
We're talking about health and relationship to wealth, how health affects wealth, both in a positive way and a negative way.
Yeah,
and
okay.
Some of the things you could.
We need to end it now.
We're closing, We're closing the rooms.
I think we can do a broadcast to them now and say we're going to close it. It's going to close in 1 minute. If you click on the broadcast button there, I think that's how it should work. And say 1 minute and then give them a chance.
I'm going to give a voice broadcast.
I think so.
Yeah, so hello, everyone. I'm sure you're having a fantastic time, but we're going to be closing in 1 minute. So please round up. We'll close at 8:18. Thank you. Yeah. So how was it?
It was
Another-
great.
Another success one, isn't it?
Absolutely. It went very well. It went very well. Also very well attended as well. We're quite
Okay.
happy with everything.
Yeah. Congratulations.
Oh, congratulations to you. You did all the hard work.
Well coordinated.
Thank you, Auntie.
Auntie,
Thumbs up.
Thank you, Auntie.
Auntie, thank you.
So the two IBs.
Auntie, thank you.
She has been my partner. Okay, so we'll close the breakout rooms now. I be close the rooms.
Okay, close. Okay,
Are
they'll
we
be-
all expected to come back before you close?
Yeah, you're all coming back here.
Yeah, so they all come out anyway automatically. In 49 seconds, they'll all be here. But some of them are already coming in here by themselves.
Hi, Ivy. We're just hearing you in the background. We weren't sure.
Oh, could
Yeah.
you hear us? Oh no.
We could hear you.
We couldn't.
Oh, I think the broadcast was still going on. Okay.
So that we thought you were hinting that it was time to come back.
Yeah, and we have to come out.
Yeah.
Well, to be fair, they'll all be out in what 10, 9, 8, 7. Okay. Unmute
While we're
you.
waiting, there is something I quickly like to say. In our group, somebody, it was Sandra, I think, wanted to know, how do I support somebody who's dealing with loss? And that's not something we touched on. So again, on my website, there is a report that tells you the common mistakes that people make. It's so important to be equipped, because we can actually, trying to help, we can actually hinder somebody's journey. So please make time to invest in learning about grief and how to manage it for yourself and others.
Fantastic. And yeah, Ivy, anything else?
No, I just really am proud of how well it was run, and all the knowledge that the experts had to share with us, and how passionate they were about giving up their gift for free to us, and generously as well. So yeah, it's again, like you said, an opportunity. If you really have any of them you want to drill down into,
Exactly.
to reach out to the speakers, book sessions in with them. They have kindly created space for us, so you take advantage of the offering.
Fantastic. So guys, I want to thank you everyone who registered in spite of the gremlins. You know, I know that a lot of people registered, and some of them were having issues with logging in. But I know that Eventbrite sent the link to everyone's email address, because I also had to test registering as well, and I also got an email. But by and large, I just want to say thank you so much for joining us this year. Next year is another episode, it's another edition of Refresh to Relaunch. Now, I have a podcast on my YouTube channel, Ibinabo Enebi. This event was free, but do me a favor by subscribing to my YouTube channel, Ibinabo Enebi. That way you would support me and encourage my channel to grow, and I will be gingered to continue to come to you every month, every fortnightly. So guys, thank you very much. Thank you, Kemi. Thank you, Clara. Thank you, Auntie Gulam. Thank you, Dr. Abel. And thank you, Dr. Paul Wakama. I'm going to see you again next year in the next edition of Refresh to Relaunch. But in the meantime, please go to my YouTube channel, Ibinabo Enebi, and subscribe to my YouTube channel. And thank you very much. And
Thank you, everyone. Bye-bye.
noted.
Thank you.
Bye.
Thank you.